What is going on, everyone? Welcome to Investments for Beginner. My name is Andy and thank you for checking out this channel where I talk about basic introduction for investment to investing in general. If you're new to investing or just curious about investing, check out the link below for playlists that cover what I believe to be a good start to get your feet in the water to get you started in investing. My goal is to share my knowledge and experience in investing with you to perhaps help you get that financial independent freedom. I want to achieve my financial independent freedom so that way I can spend more time with people I love and try to spend more time with my friends. If you found this video helpful or insightful, consider sharing it with your friends and family so that way they can be prepared for their adventure to investing. In this episode, I'm actually gonna dial back to the beginning to what I believe every investor should learn before they start investing. This video is something that I highly recommend watching before anything else. I believe this should be the foundation to everyone investing because I believe this will make you a better investor. So here we go. Before you start investing in stock, mutual fund, ETF, and bond, there's something else that you need to learn that is more important than investing. And that is yourself. You need to learn to control your emotion. What I mean by that is when the stock price falls, you cannot panic, fear, and just sell your investment. You cannot let your emotion of fear dictate your decision. Also, you need to be patient. If you are hasty, you can miss out on important information that may impact your portfolio. You need to have faith in your investment even though they may be in negative. But most importantly, you need to study and research your investment thoroughly. What's going on around the world that can impact your investment for better or worse? What can happen in the world that can impact your investment for better or worse? If you have done your study and research and you purchase your investment, then you should be confident in your investment even when the stock market is not doing well. Second, stock market will crash eventually. It will happen over and over and over, but they will always recover and they will break new record every single time. Yes, not every single company is gonna make it, but majority of the companies will. This is why you need to understand what you're investing. For example, when stock market crash happen, Microsoft will crash, Disney will crash, Apple will crash, Amazon will crash. But they will recover because of what these companies represent and their foothold in the world. Like I said before, you have to study and research the company that you want to invest. That's why I personally believe that studying and researching the investment is the most important job because you're trying to build strong portfolio that can withstand the crash and thrive afterward to break new record. You should have different mindset when the market crashes. Think of stock market crash as if Black Friday sale and buy more investment if you can. As the price are going down, buy them. As they continue to fall, buy more. Buy once a month or once in 3 months, whichever you're comfortable with. Like I said before, you have to study and research the company that you're buying because you need to find out if the company is going not only recover but will grow higher after the crash. If you choose poor investment throughout the crash, then you will suffer losing a lot of money. So do yourself a favor and look deep into company because they will either deplete away all your money or give you back with much more money than you gave them. Third, don't be blindly persuaded by what the social media, news, or people around you are saying. This is your money. If they say you should sell, look into why they think you should sell them. If they're saying why you should buy, look into why they think you should buy them. Take what people around you are saying and look into them. They may provide you with some information that may be crucial, but it should be up to you to decide whether that information is good or bad. Then based on what you gather, you should decide whether you want to buy or sell the investment. Like I said before, research and study your investment. 4. Time in the market will beat the timing the market for most investors. If you're a young investor or still have a decade or two before you retire, Embrace the market crash, ride through it, and wait until it recovers again. Nobody knows when the stock market is gonna crash. If you think you can time the market and pull out all your investment, either two of these things gonna happen. One, market does crash and you save all your money. Or two, market didn't crash and it continues to grow and now you have to buy back the investment for higher price. I remember back in 2018 winter, people were saying that the market crash is happening. Look what is going on in stock market. 2019 is going to be the stock market crashing year, because during the 2018 winter, stock market was basically going negative in the year-to-date return. I'm sure a lot of people save money from getting out, but what happened right after the winter of 2018? Well, 2019 was nothing but gain. Those who thought the 2018 winter crash was gonna continue through the 2019 missed out on making insane amount of money by the end of 2019. S&P 500 is the top 500 American company all put into one category. This S&P 500 made roughly 30% return in 2019 alone. Imagine the amount of money that those who tried to time the market waiting for a crash to continue and ultimately missed out making huge gain. I was tempted to sell my investment back in winter of 2018 when my total return of 2018 was dropped back to basically zero. But I said, you know what, screw it, I'm not going anywhere, I'm still gonna invest, I'm here for the very long run. So I decided to ride through it, and in 2019 my portfolio did 48% return. That's basically gain of half of my portfolio. Of course, keep in mind that this is happy ending story. The stock market could have really crashed and we could all be looking at negative return. Other problem with timing the market is if you are those who pulled out the money, when do you exactly put money back in? You don't know when the market is gonna go up, so you might become very hesitant and you might wait too long that you might be slowly missing out on the growth. That's why I recommend when stock market crash, just buy them once a month or once in 3 months or even 6 months. Now, if you're at an age where you're near retirement, you do want to shift your investment in a safer area regardless of whether the stock market is gonna crash or not. You may want to invest more into bond, maybe even mutual bond or ETF to protect your investment better. Stock will be extremely risky to be investing during the retirement age, and it's not worth high risk, high reward, because at your retirement age, you should be sitting on comfortable amount of asset, but more importantly, you might not have enough time for the stock market to recover. At number 5, if you don't feel comfortable investing with large amount of money, start with $100. Get your emotion used to the feeling of stock market going up and down. In other words, you want to numb your feeling. This is one way that will help you to control your emotion. When you feel comfortable and confident, you can invest $200, $300, and so on until you feel completely good about investing in thousands of dollars. At number 6, build yourself an emergency fund, and more importantly, a budget. Your budget will determine how much you can put money on the side for the emergency fund and for your investment retirement accounts. If you do not have any budget system in your life, make sure to do that before anything else. Creating a budget will help you how to spend your money and how to stay away from being in debt. The emergency fund purpose is to avoid touching your money in your investment retirement account in case a financial emergency arises. Less money in your account means less money you will make from interest. So you want to make sure that you have an emergency fund on the side to avoid touching your investment retirement account. Popular belief is to have about 3 to 6 months of expense fund bill. I will make future video about my own personal budget and where and how all my money is being distributed. Lastly, know when to sell your investment. I know this sounds contradicting to what I said before, but hear me out. Selling your investment might be the most difficult part, especially when your investment is keep increasing capital gain. Looking at what you invested, do you plan to hold this particular investment for short term or long term? If it's a short term, perhaps deciding when you want to sell it might be important, so that way you have already set a deadline to when to sell it. For example, when your investment made 10% increase, you sell it. Or when the investment made $1,000, then you sell it. Personally, what I do is when the investment past certain dollar or percentage, I tell myself if this investment fall down to this dollar or percentage, I will sell it then. For example, if the investment alpha went from $100 to $150 and then it starts to go down, then I will set my sell point at $125. So if the investment do fall all the way down to $125, then I will just sell all the investment alpha. I make sure to give my investment some breathing room to fall because it can go back up. So I don't set my sell point at $140 because that's not enough room. Because investment can dip further than that before it goes back up again. But this changes as the price of the stock goes up. If the investment alpha kept going up to $300, then I will readjust my selling point to maybe $250 and not at $125. Ideal here is to know when to cut your gain if your investment is going down and down and down. You can choose to just hold it for however long you want or decide when you want to cut your gain. Keep in mind that this is my strategy with my short-term investment only, and once I pull out, I'm going to be using the money for the long-term investment or other short-term investment that I think may have potential to grow. My goal for my portfolio is to eventually own many diverse long-term investments. With the long-term investment, I don't necessarily have the sell point, but God forbid if they were to ever go under like bankruptcy, I will sell it as soon as I can before losing all the value. So that's gonna be it for this episode. I hope this episode really gave you an idea what you should be really focused first before you decide to start investing and how to prepare yourself too. Over the next year, I may learn more things to prepare for new investors, so in the future, I may make update video for before you invest. For everyone who sticked around to the end, thank you so much for the support and make sure to subscribe so you can watch more investment or related video in the future. Super smashing the like button is always appreciated. Thank you again, and as always, invest wisely.